Okay, so up here we are in an area of low volume. That's where all the secondary tests of note are happening. Um, Now, if I take a look at this structure, if I were to treat it like, let's say, an accumulation, I would be looking right here. Well, no, I wouldn't because this is a 15-minute chart. And that area here is definitely not strong enough, or is it? Interesting. So okay, so if we look at the, let's just take the session volume profile off for a second and turn on the fixed range volume profile. Fixed range volume profile tells us there is an area of right here where there is a lot of supply coming into the market. And then we hit again we hit a large area of supply here. And what happens when we hit that large area of supply or effort is the price starts to decrease. My assumption is that if we hold lower, then if we break through this area, then the longs on the way up will essentially start to choke and drop their positions until we get to the base of the trading range just here. So I'm just looking for that. This is a Dow theory entry. I'm just going to scroll in quickly to the 4-hour chart to make sure that an entry below there is below the white line is occurring below the 4-hour SMA, which it is, which will make it a strategically valid play. So let us see if this is the case. Lots of supply coming in there. Oh, sorry, lots of volume rather. Effort pushing the price higher. As effort leaves the market, supply goes down. As suggested, by the Wyckoff method, we should not be executing on the breakout. Retest. So we could have taken a trade in here, that would have been good. We did. So backing up action. Oh God. So I want to see this structural break of this backing up action right here. And when we get the structural break of that backing up action, it'll be go time basically. Go time. All right, so we're going to just put this take profit down here and stop loss up here. Son of a gun. Right, all right. So something that I'm going to need to practice is that concept of not taking the breakout. Okay, cool. So let's just have a look here for a second. Okay, so we're not taking the breakout of the trading range itself. We're taking the breakout of the backing up action and the backing up action outside of the trading range and the phase C test of demand in the case of a short. So the test of demand in this case, if this were to reflect a spring of a long trade. Right, so okay, so no problem with assessing the trading range this way. Should have actually let that one run. Oh, it did. All right, so let me just do some labeling here. We've got the buying climax. Automatic reaction. Okay, it's the test of the buying climax up here. And I'm calling this okay. What I'm going to do is I'm going to call this one the automatic reaction, and this one the secondary test, because this is a proper secondary test of the buying climax. We get a up thrust in phase B. Okay. And a sign of weakness preceding here's a sign of weakness rally in phase B, up thrust in phase B. Okay, we get multiple attempts to up thrust again. Sorry, we get a large commitment rather to the downside here, which is also happens in phase B. So we're showing a huge amount of weakness in phase B. I do not give a fuck what Roman says in terms of you know, this being thought of as a phase C. I'm still thinking this is a build-up of cores in phase B. And phase B is where you want cores to be built up for the oncoming move. Now, I call this phase, so this is a major cell. Okay, also in phase B, a attempt to upthrust. Marking phase C and a change of character. That change of character being the failure of the upthrust. We could have taken a position anywhere sort of we could have taken a position, but I would have needed a little bit more cores, just to not a little bit more cores, but a clearer indication of a breakdown. That indication comes as we get last points of supply. Last point of supply. And break out into low volume, giving us the entry signal. And we're good with that 1 to 3 trade there. So a breakout candle after a backing up action, a major backing up action in phase D is a correct area to take a trade. We are no longer taking breakout candles in phase C, although I think I'm going to have to assess whether or not we take this sort of retest action, and that would be breakout into low volume, a retest of the low volume area, and then proceeding move to the upside if that was a long. So that's something I'll need to reassess. At this point in time, it'll be left out of my strategy, and we will call any execution in phase C of a upthrust or a spring a legitimate entry, so long as price closes into the low volume area. And we can put our stop in another area of low volume support or resistance. And the same can be said for an entry into a phase D entry. So rules are going to need to be established moving forward for execution.